All right, let's go ahead and get started. Greetings, everybody. Hope you're having a good Labor Day holiday. That's enough of my picture. Um, it's a beautiful day in South Florida until about 3 o'clock, and then the thunderstorms kicked in. Those, we had we sort of like to take our friends out on our boat, so we had about 14 people on the boat yesterday, and everybody was concerned about the rain. But I've now lived here long enough. You just look at the clouds and you know. And I said, it'll rain at 3. We'll get back at 2:45, and it's exactly what happened. All right, we're gonna go ahead and get started. So the point of today, again, thanks for joining. I know it's a holiday, but I figured I wouldn't be the only one with some free time in the afternoon or late morning, early afternoon. I'll go over my workflow, which is why Scott and some other people are here. I'll introduce you to some of the new tools in the program. And we have a question and answer session. So I'm going to ask you to use the chat box, um, the meeting chat for any questions, and I'll try and answer them as we go. If you've been listening to me on my videos, I'm definitely not as bullish as I was. Um, I maybe jumped the gun a little bit on Friday, and I started to accumulate some low cost, low risk positions and some contra ETFs. September is not a pretty month. I showed that on my weekend videos, both of them. And it looks like gold is breaking out, which I thought was another opportunity. So I entered some positions there on Friday. And when I say they're low risk, what I mean by that, and if you watch the video I put out last night on how I chose my option spread on gold, I want things that I'll lose less than where my stop was, 3 or 4% of what it would cost to buy 1,000 shares or 5,000 shares, and I can design an option spread where max loss is that or less, and I can control stocks um, at a lower cost, less impact on my margin account. That's what I want to do. So when I look at those trades, I'm looking for as unlimited upside, control downside, and then I pick the trade that makes sense. And I picked the synthetic call, previously known as a chicken shit synthetic, on the gold. But let's talk about what's going on with the program. And Praveen will probably join at some time. I talked with him this morning, so I know he's up and about out on the West Coast. So it says workflow and trading, which we'll do, but it's also to show you what's new on the program and a couple of other announcements we'll make. Hey, Bazi, thanks for joining. All right, let's see if everything's going to work. So, as always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education. The intent of this project today is, or video and live meeting, is to show how I use Market MRI Pro. Um, I have loaded up my product and trading view and trade station, and I may revert to that at times. So if you have questions regarding, oh, you like the financials? Yep, new version loaded today. That's why we're doing this. You'll have plenty of opportunity to ask questions. Trading involves risk. You're solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Um, Trading stocks and options should be considered risky. When I do my options teaching, I hype on low risk, low risk, low risk, low risk. I also called out yesterday when I talked about the synthetic, how it could be a very high risk position and why I don't take that trade as often anymore. So when it comes to options, the Options Industry Council and all the people that govern trading and risk would love me to tell you that they're very risky. So I will tell you they're very risky. I think options are great. I think options are hard to learn on your own, and you should always take a course, read books, and get proficient before you play them. But I do think trading options is a great way to trade, especially if, like me, you want to limit your risk, which sounds bizarre when the powers that be tell you that trading options is is risky. Um, my Metastock product, it sits on my computer every day. I say I'm going to sign off on it, and every day I get too busy on something else. So that'll be out soon. And the wealth charts product with the CAT scanner really is where it all started and really gave me the vision of what to go with. Don't expect that thing to be enhanced at all. Um, but we're continuing to look at Market MRI Pro and we'll add new features. Everybody here is probably in the Google group, but I am going to post this in some places, probably just in the Google group, I suspect. But if you're not, it's a great place for me because it's the only place I can communicate with you. There's no charge, and unless there's special holiday pricing like I'm going to throw out there today for 24 hours, there's you get an extra $100 off in the Google group. Um, I don't spam you, and I try and make it worth your while. So, you know, I normally charge 19.95. I looked at what people have paid to date, and it does range some. I don't think anybody has paid 19.95 because I've had launch specials where everybody's had at least $400 off. At some point, I'm going to stop doing that. Um, so the way I priced it for Labor Day, good through Tuesday midnight, is 12.95 for the first year. And as I said, when people started buying it earlier, that year two would probably be less than 5.95. Now I'm saying 4.95, and it's really going to cost something consistent with how many people I end up, continuing and I bring in. There are costs on an annual basis, the data being the biggest cost. We're now looking at options providers and then started briefly talking with somebody who is an unusual options person who mentioned perhaps putting an indicator into the program and maybe making some scanning tools to look for unusual options and trying to include those in the product. So probably as an add-on for the indicators. So that's something that will add to my costs, but I'm not. I think those that know me personally will probably realize that this isn't my source of income. This is fun, but it is something that Praveen works his heart out on, and this is a way to compensate him for his time. So 12.95. Now, what if you own you own all my other products? Then you get the cheapest. So if you own TradeStation product and you own the Wealth Charts product, um, then you could consider the $100 top-down trader group 500. You're still not going to get to this price. So this is probably the best price for everybody I've ever offered it at. And again, just to call out, why did I put John Per? Okay, I hadn't looked at this formatted before. The 24th and 25th is John's meeting in Palm Beach Gardens. Great meetings. John's a super teacher. He'll have the first add-on. Um, he keeps adding things. What he's putting in this add-on are not available anywhere else, which is pretty cool. And whether it's an add-on or he sells his own product based upon the tool, still to be determined as his pricing, but I'm pretty certain it'll be available for that meeting. My meeting follows the 26th and 27th. We now know the location. It's the Marriott in Palm Beach Gardens, 1250. 2 days of training, breakfast, lunch. This is for just my meeting, and then breakfast and lunch Sunday and Monday. There'll be drinks and snacks throughout the meetings available. Um, we'll go out on my boat, weather permitting, Sunday night for dinner. And it's at this point, it's beyond non-binding. So if you're interested, either for internet version or for a live version, just reach out to me at marketmripro@gmail.com. Now, I do a fair amount of these freebies because my wife would say, I like to hear myself talk. But the best part about having Market MRI Pro, I could say, no, honey, I'm doing these because it's a sales event. So she lets me do it. I'm not a hard seller. Why would you want to come to the live meeting? Because take what I do in an hour and a half here today, 2 hours today, and give me 10 or 12 hours. Um, it gets, we go, the what are we doing? How are we doing it? Why are we doing it? When and where do we do it? I can cover that in the live meetings, and I usually get pretty good reviews. And everybody knows that I'm a top-down trader, and that's where Market MRI Pro is really designed to support. And that's where John's going to have to decide, would he rather have a different application or just an add-on? Because mine is Market MRI Pro is geared to me, and most of you know where it came from. Praveen was like most of you. Somebody would come to some of my videos, maybe had purchased some of my tools in the past, and Praveen said he could build me a real-time scanner after I got scammed by somebody who, I guess karma works in funny ways, because this guy has sold a lot of products without lifetime data, and his products don't work anymore because he's having issues with the data. And then Praveen didn't stop, and he kept beating more and more. So you'll see in my product daily and weekly charts, although we can get down to minute charts, indicators and scans to help me find setups. So we're going to see some additions on the scanning today. And I trade equities and equity options. If you were to look at my portfolio, which I'm going to show you today and show you the update over the last 2 months, it's been a little rocky, but it's been okay. Um, you'll see mostly equity, mostly options. My A trade is stocks in a longer term uptrend or downtrend, pull back to support or retrace to resistance depending on an up or downtrend, and then buy on momentum off of that support or breaking down from resistance. Rules-based position sizing and stop management and seasonality. Again, part of the upside to me of doing the live meeting is I have um, a lot of time to do money management rules and seasonality. And I literally, if I didn't do my videos, would spend 30 minutes a night at most in what I do. I happen to like doing videos. I've been doing videos since about 2000 just because it forces me to follow a plan, and it holds me to accountability, even if it's to just myself. And how I trade hasn't changed in 30 years. I get better tools, I spend less time, and I try and pick up nuggets that I can put into the tool every day. And you know, again, like I showed you back July 11th or 12th, whenever I did the I show all, I don't, I've historically at the meetings never really talked about my performance because I'm not sure A, you should believe it, or B, it's anybody's business. I show you trades and returns that I made on it. And I do that for one reason. When I show the Amazon trade and I show that it paid for much of my house in Santa Fe, they don't show that because I'm out there saying buy my stuff because you're going to make a lot of money. But if I show you 10 trades, 10 of my greatest hits, and they all have the exact same setup, and you could see how my approach to trading them has changed a little bit over the years and maybe improved. Maybe you can learn from that and start to believe in the setup. Um, and I will show you that same account that I showed you that I doubled between January 1st and July 11th or whenever I show the video. I talk about direction of the market every day on my videos because that's the most important thing. I really am looking for a pullback here, but frankly, and I'll just pull up my trade station for a second because I like the auto-generated trend lines. We are not far from support. So here's the spiders. I mean, this is a 1, 2, 3% pullback, but if it pulls into support. The Qs, maybe a little bit more. The diamonds, and these are not lines that I'm trying to auto fit, trying to maybe a little bit more in the Russell, trying to convince myself that the downside's probably protected. I've been talking about the 50, which is the yellow line, um, because I don't have auto-generated trend lines in Market MRI Pro. Maybe Santa will bring them to me this year because that's what I want to add next, or one of the big things. And don't trust anything that I tell you or anybody else tells you about performance. Assume that I have 42 accounts and I'm showing you the best one. I'm not, but you always have to take with a grain of salt. Um, as I said, as I said back in July, Years ago, like before this, my current day business got so big, I would manage several million of my own money. I have a couple of money managers that have pieces of it. Um, but this business is getting close to an exit, so I basically, between spending most of the balance in the account on my home in Santa Fe, I was happy to run a small account and let the others worry about my money. I had some health issues in 2024, which are doing great. Allows me, so I didn't want to be managing seven figures of my own. My granddaughter lives right around the block, so and we have the swing set at our house. So my grandson's in New York. So again, lots of reasons why I didn't want to go crazy this year. So I simplified my life, as I said, I'm letting the professionals manage a bigger piece of my account. And I just started this account this year with 150K in cash. I doubled it by the time I did the program in July, minimal margin, and I added more money to the account. And if it wasn't for two stocks, I would have doubled it again in the 2 months since I did it. But I got hurt on Oracle and something else this week. They just had, after a big move and getting me all excited, they both tanked. I think AGX was the other one. Maybe they'll bounce this week, but we'll see. No big deal. Um, and then let's just cut through and let's just cut and talk about that. I mean, if you're going to buy my tools based upon the fact that I say they work, then I should show you a little bit. And this is my main trading account. If you look today, you're going to see a lot of similar stocks are in my main trading account as there were a while ago. Now, if you can even see this, GTLS got bought out, so it's gone. GEV tanked, and I got out before it tanked. Toast pulled back. I'm ready to get back in. Poet, I'm out of. AGEN, I got a big loss on. I don't care because I like their data and I'll probably add to my position. Healthcare has been weak, but it's a story. I'm not buying it for any other reason except I believe that they have a product that'll get approved and they're too cheap if that happens. Um, I was at 158.8 when I did this on July 11th, and just for the sake of arguments, if you could see it, I'm at my P&L up to 251. 5. It was a little higher before Oracle imploded on me. So it's been a good year. I mean, again, I started with 150. I added more cash, and I didn't buy a lot of positions over the last month because those Hindenburg omens. If we look at how did I get here, I do use options for leverage. Uh, the other bad pullback, I got dinged on something else pretty. Oh, AGX. It's a data center related play and good fundamentals. Chart looked good. I haven't been hurt that bad. Oracle, I got hurt because I had profits in it and I broke the golden rule of letting my options get fat with profits and I didn't take enough off. So AGX was the other one. And we can look at both of those when we look at charts. So I use low cost options for low cost stock alternatives, spreads with limited downside risk. And again, I'm not going to go into my options today. Watch the video I posted yesterday. The last 45 minutes, 40 minutes are taking apart GLD and showing you the trade that I took on Friday. Judicious use of margin required for some of spreads. Avoid big losses. Even though Oracle looks like a big loss to me, it's not a big loss when I look at historical positions where I may have lost something that was significant in my portfolio. It was more the gut punch of being up and then getting fooled by a super strong day and then just collapsing the next day. Um, Judicious use of margin. I don't mind using margin. Um, if we get a 5 or 7% pullback here and we start to level out in the middle of October and I start to see some eurekas and other buy signals, and I'll be talking about them on the videos. If I start to see some positive divergence, which John likes, a person would rather call convergence, I may get very margin up because I don't mind margin if I'm in a trending market or starting a new trend. I don't use margin and chop. margin's dangerous here. Again, avoid big losses by designing your trade. Don't chase shiny objects that are extended. And I give you with the high jump an objective way of measuring extension and then scaling up and down my cash reserve based upon the market. Right now, I think that there's a lot to be worried about, but I'm not. I did, as I said before, I nibbled on some contras. We can talk about that as well. But I'm still mostly long, but I have a big cash position. For me, follow my trading plan. I want pullbacks and uptrends. I love that two Momo dot screen. I went back and looked at HGSI, which is the historical tool that I use. I didn't have a scan that could look for kahunas one day ago and kahuna today. But when you look visually, and I've known this for a long time, that you see two kahunas in a row, something's going on with that stock. My Momo is not a kahuna, it's a derivation of that. It includes the elder impulse as well. And I think it looks good. And I like, whoops, John Person's high close doji setups. I mean, I am careful to manage my positions so that they look the same as if I bought the stock. Just because I can buy a synthetic on Amazon for a buck or two, controlling 100 shares for $200, it has the same risk as buying the stock. I'm not going to buy 10,000 shares because my average purchase is 20, 30, $40,000. I'm going to buy the same amount of shares I would have bought if I bought the stock. No revenge trading, roll my winners up and out, meaning I had this thing where in my head I wanted to avoid short-term capital gains. And I made some very dumb decisions. I would hold on to things too long. I don't have that problem with options. They're all going to be short-term capital gains. So there's no point in keeping them any longer than I need to. I'm not saving on taxes. But if I like something, I will raise the strike price so that I can put money out. If I have a $25 option and the stock goes to 50, that's $25 of intrinsic value. I probably want to put some of that in the bank and maybe raise my strike to 40 or 45 and then push it out a month or two. Now that's going to cost me a few bucks. Maybe I'll create a spread by looking at how much that premium is to go up and out and then selling a call at about half that premium, reducing it by 50%. I love half off sales. So there's different ways that I can manage the trade and stay in the options. And be careful of FOMO, whether it's chasing shiny objects or, a lot of people call this last rally that was difficult to get in. It kept people out. Um, you know what? Big deal. You wait for a pullback, you get back in the next time. And if you miss it, you miss it. It doesn't, you don't win by being the last guy in before everybody's jumping out. And then, the benefits of a smaller account, I'll let the guys that hold my money worry, sleep, have fears at night. I sleep better. I don't get up and look at the futures anymore, and I have less anxiety at earnings seasons. I'm going to grow back up probably once I sell the business to maintaining a couple $1 million account because then I can do some large options trades and I have a lot of margin to support it. But right now, I'm happy with what I'm doing. And that, you've seen this before, but the things that matter, grandkids, my wife, I better go with her next. The boat, which we were out on this weekend, and there goes one of my 7 mice on my desk. And then Michigan football, which that's the one of the coaches that are maligned for their sign stealing and deleting text, but Sharon Moore. So that's what matters to me, and I'll let my money managers worry about, wealth managers worry about what's going on. So some new features, and I'm very happy. I'll show you on the scanning side. We added a new trading system without me telling the name, but if you've been to my live meetings, I talk about a system that's been around 30 years, calling it AI before we even had AI, or they call it AI now, but it's the same system. And it's basically their system. And no one ever tells you what's in it, but if you scour the internet, you can find things all over the place. So we call it dynamic trading system. It's just another crossover system. Um, crossover systems seem too simple. They seem, why should they work? I mean, they're just crossovers. And what I found, if I want to pay attention to it, whether it's the EMS, the CPR, this one, and they all have different holding periods. The faster the signals are, the shorter the holding period. Is if you actually follow a good moving average crossover system and manage your money, they can work very well for you. And then on the scanning, I wanted show me stocks crossing above the 17, the 50, or the 200. Show me stocks pulling down to those moving averages and bouncing. Show me stocks running into them and dropping. So those are some of the new scans. I'll show you that today. We've added over the last few months VWAPs, the chandeliers, and more, but that dynamic system will have indicators set up for that. Ratio charts, my goodness. You're going to see why people want to be in technology. I'll just put it that way. We've now taken a product that had just our charts on the sectors, and we've gone to daily and weekly. And when you put a weekly time frame on those ratio charts, you can see that technology and I think communications are where you want to live because over the longest period of time, everything else underperforms the S&P. It's bizarre. Um, I'm not into the financial reporting, but the only fundamentals that I care about are earnings, revenue, multiple today, forward-looking multiple, the growth rates on earnings and revenue, and dividend. And then when's the next earnings? And all that's captured within the chart. And I'll remind everybody where that is. But some people want to see financial reports. So it turns out that our data source today is called financial modeling, that anybody can go there and you could see the types of data that they make available. Um, we're now looking at incorporating some of the data from, I think it's the Schedule 13s or whatever they call it, when the big hedge funds come out and tell you, what they're buying and what they sold. There's a way to incorporate that. The one thing it didn't have, unfortunately, are the options. So we're looking at various vendors for that. And then the other thing that I'd like to bring in, which is probably not financial, but the hot lists, biggest moves, biggest volumes, things like that. And we just got to program it in. We'll continue to add features constantly. You guys can make suggestions of features. There's some cleaning up we have to do on the line drawing and on the symbol list. I know Praveen was working with one or two of you on that over the weekend, trying to make them work better. Both I had some issues with copying to other lists, and I don't know how much of it's me and everybody else has the same thing as well. I think it might be everybody that sometimes those lists disappear when I come in and out of the program. So we've got to get those cleaned up. But I literally watch other people's videos just to learn new ideas that we can incorporate. Obviously, nobody steals things that are proprietary. No one tells me what makes up their things, but I get ideas from it. And those ideas I communicate with Praveen, and if there are things that we can turn into something, we will. And if you have things that you're interested in adding that are not here, it's time. We're open for that business too. So let's go into the program, and then I'm going to include in there my approach to the market, but I think everybody here has seen it. And unless somebody has specific questions, I'll just leave that in the deck so we can spend more time in the program today. So before I go through workflow, and I know for many of you that are new to me and new to the program, workflow is important. And that's why I want to spend time on workflow today. Let me just show you where some of these new things are. So just to remind everybody, my basic, and let me, bum, 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 bum. Let's see if this will hide it. Okay. When you boot up This is the JAS layout. At some point, I'd rather it become your own layout. And that's something, once everything is available as an indicator, then you'll be able to do that. You can do that right now by going into this plus, creating Mike's layout or whoever it is, and deciding, do you want to have the list of stocks? Yes. Do I want on the top or bottom, right or left? Let's be different. I'll go on the left. How many charts do you want to have in your layout? I'll have two. All right, now, do I want to sync symbols or the interval? Symbols would be each chart will have the same stock in it or index. Interval would mean I'd have maybe 2, 3, 4, 6 stocks or ETFs or indexes, and I want to sync on the interval so those don't change. Well, let's sync on the symbol and create a layout. Now, it better pop up here. So let's get out of here. And sometimes it takes longer than I expect it to take. And if it doesn't pop up, I'm going to be very disappointed because that's usually something that works fine for me. What did I do wrong? Let me try this again. Maybe I did. Oh, I know. Maybe I didn't. Like two left, two symbols, create. Well, of course it's not going to work because I'm doing a presentation. All right. Up, there they go. I just didn't give it enough time. And so now sitting up here, Mike's got his layout with his list on the left, his stocks here. Maybe I want to make, maybe Mike likes daily on the right, weekly on the left. On the right, daily on the left, weekly on the right. So I got that set up that way. And then if I click that thing, I can have different amount of days on each one. And I can set them up any way I want them to be set up. And I can go and add indicators by clicking in here. And you'll see you have breadth, my indicators, momentum, price indicators, some volatility, and then some volume indicators. And that's something that will continue to grow, especially as people make requests. So if I want to kill something I just created, click it here, and I go Mike 2, delete layout, Mike's layout, delete, and that should go away, and they went away. So you have the ability of creating and removing layouts. Let's say that, oh, don't do that to me. Yeah, sometimes, and this is something for Praveen, I've always blamed this on the fact that I have multiple installs, but let me come out and come back in. Give me 1 second here. Let me do that. Um, Sometimes I get that thing blank. Um, Yet to be an issue where it didn't come back up. Hopefully, yeah, there it is. And this is version, I think, 1.03 or 1.3, which we updated today. So in the charting layout, everything here is dynamic. You can make things bigger or smaller. You can, up at the top, and every window is a gear. That gear up top are things that are settings. I've turned the chandelier off, but it's still, actually it's back on because I got in and out. So let's turn that off. So the chandelier is off, but you'll see it's still in the list here. I just did because I didn't delete it. But I can control my moving averages, what length I want. Um, Here is the seasonality. I've got 5 years starting from today and 10 years. I could put a third seasonality of 20 years, as many as you want. And the chandelier, the one thing that people like to change is the factor, the ATR, 2 or 3. Um, and then down here, you can change the color of any of the indicators. By clicking on them, you basically make them disappear, but they're still, to unclicking and brings them back. So you control the existing indicators with the gearbox. Let's say I want to move this above the bongos. See that little triangle up? That move this up and move the bongos down. If I want to replace that, triangle up. So I have a triangle up or down, which allows me to move these windows. And then if I don't like a window, and I don't think you could do it here, you'd have to go to something that you make up that's custom. This is one of my market breadth. I guess we didn't. All right. There is on the beta version that didn't come out, there's an X to kill a window. So I'll have to make sure that that's activated on this as well. Um, high low jump. I mean, it's in the PowerPoint if you haven't seen it 1,000 times already. One thing that maybe is a formatting thing that I'll talk to Praveen. This is dynamic, so something that is not anywhere near the top. It looks like it's at the top, but you got to look at the number here because I can pull that down. So one thing that I do is I always highlight on the candle, and you notice that everything lit up. It shows me where the high jump value is above 95 or less than minus 95 are signals. Open, high, low, and close of the bar on the day, where the moving averages are, where the chandelier stop is within, I can see the close is at 210, my chandelier is at 204.73. I can see the 50, the 200. I'm going to talk to Praveen, and typically I say things on these videos and he listens to the video. I'd like to add the percent from so that when these boxes will tell you how far price is from the 200, the 50. I think that would be useful to me. What else do I tell you? People have asked me where this comes from. How do I get the percent change on the stock? They're simple. It's an indicator, and it's under price, and it's basically percent. In fact, I'll show you under the indicators, price, and probably not the best title, but it's really the display only change percentage from previous close to the current close, or current bar if it's real time. And so I like to be able to hover over and look to the left and see the percentage move of the day. Regular volume, we're supposed to have put a moving average on that volume. I don't think we have, so Praveen, I want to have a used or customizable simple moving average here. My dots, the green is the EMS, which is similar to what's in wealth charts. The CPR is it's another moving average crossover system. Again, very different things are in it between the two, and between that and the new dynamic systems. Sometimes they fire more frequently. The EMS has been in for a while, and the CPR has had you in and out. All right, then you have the four dots. Of course, I don't have a slide with four dots here, but let's see if I go back far enough. There's got to be a four dot day. Here it is. So you have the squeeze, which is above the PSAR. All right, PSAR is just a wilder PSAR. When you come out of the squeeze, the next three bars get a green dot. Why? Because usually I want to buy when it comes out. So I can scan for those green dots. Then you have momentum, breakout, volume, and gap. And one of the things that I really like are the days when I get two blue bars in a row on the one above the squeeze. And that's where I find a lot of my um, actionable stocks. All right. So what else do I have here? This is relative strength versus the spider. It's a secret weapon. It really is. IBD relative strength, which is a great tool, allows you to find stocks that are outperforming other stocks in the market. That is not what this is. An RSI is an oscillator, the relative strength index. That's not what this is. What that indicator is, is there an indicator that shows each of the dots mean? I don't have a label per se, Scott, but in the PowerPoint, which you'll get, I'll put it in the top-down group after I'm done today. And I'll talk to Praveen about putting the labels. Come on, why isn't this flipping for me? Oh, because I probably turned off the slide. If you go down to, here's the labels. And this is on slide number 30 in the in the PowerPoint that I'm not going to go through, but I'm going to put out for everybody. Keep asking questions. So what is this? This takes the relative strength of the stock versus the spider. That is a ratio chart. If you've been around me long enough, you know I love ratio charts. When that is going up, it means the stock is outperforming the spider. When it's going down, it's underperforming the spider. Why would I ever want to buy a stock where that's going down? I wouldn't. In fact, um, the time to buy these stocks is often when something that's been below breaks above. And they'll pull back, but often, here's a little breakthrough, but often they'll get resistance. This yellow line is a moving average. Now, is it the best moving average it could be? I don't know that. Right now, it's a 14-day EMA. I've got to get the customization there so you can change that. We chose that one because it seemed to be a good one, but I am looking for crosses above or visually turning up. I don't want to buy stocks when they're below it because they're underperforming. Buy stocks that are outperforming. This is OBV, and this is a 10-day exponential, I believe. Let's see. Yeah, it's a 10-day EMA. And again, I'm looking for breakdowns. I'm looking for breakouts. All right, so on this bar, it was a good bar if you look up above. But what I liked about it is the OBV broke above its moving average, as did relative strength. That's something that I'll look for. How can I look for those? Up here. If OBV says a 2, that means on the daily chart, which is what we're looking at, the OBV crossed above. Let's put on Agilent. It'll take a second because it's got to wake it up. It means it crossed above the moving average within 2 bars. Here's your cross up. The relative strength, if it's not negative, it's green. But it's going to look white here. The relative strength tells me that within the last 2 bars, we crossed above the yellow. And the weekly relative strength says within the last week, we crossed above the moving average. So I can actually find, and it's not in the drop down, but if I only wanted to find stocks where all of these were green, and this is where it gets tricky, that opens up a filter, and I could go in here and go, I only want it is greater than or equal to 1 day. I want this to be greater than or equal to 1 day. Make that one greater than or equal to 1 day. And you can see right here, OBV is greater than 1, relative strength greater than 1, meaning the days cross, and weekly. And now I will only find stocks that are positive. I think we did it so we could, yeah, somehow you can limit how high it gets as well. So I may only want to fish from stocks that look good and then come down here and throw in that new dynamic systems long and see what kind of stocks made it. And then I could go into here and go into my indicators and somewhere we put it, category price, dynamic system long, and you're going to see, I think, if I did that right, some new signals pop up. I should have put it on. Maybe I didn't double click is what I think. Okay, did not double click. Try that again. I have a tendency of putting 12 things on because I get impatient. All right. So here we've now filtered for stocks that have had a new buy signal come in the last couple of days. And again, you'll have to play with this signal, but I'm able now to combine the signal and the scan. And then, of course, I could come and filter it for above $5 and 500,000 shares. That's good. And it should get even smaller. So I could start to make the list small. Now, forget what goes into that system. Tell me if these look like good stocks. Autodesk. Yeah, it's probably going to get extended. I'd have to go look at why. Probably had earnings. Remember, this is the fundamentals. Earnings came out the 28th. It had 20% growth, a surprise, 17% revenue growth, a surprise. It trades at a PE of 32, which is kind of where the market is. It doesn't pay a dividend. It's got really high ROE, which Ian used to say was a good thing. So Autodesk looks interesting. Now, when I see a move like that, I get worried about high jump, but if when I click on this, we're not there. I don't like that it finished in the bottom part of the candle, but it was a soft day on the market. Not a bad looking stock. I wouldn't buy it at the open because I expect it to pull back some, but that might be what I'm thinking about. And if I want to know the news, you go to the thing over here and you could see, ooh, new growth is unstoppable. Well, maybe that tells me I should be more interested. And one of the things I love so much is I could hit that and the story's going to pop up here. And I didn't need to have an account because I haven't logged in. And you could read the story. So it's all in one place. I love this screen. Now you may want to change the moving averages. Go be my guest. You may want to add things. Be my guest. How about Baba? Beautiful. It's one of the stocks that I talked about yesterday. Its earnings are horrible and its growth is horrible. But now they're a cloud player, okay, and a bigger cloud and AI player. And that's what drove it. That's a pretty nice pop from resistance. SCELH. This is the monster drinks, I think. Big run up, pull back, and a new breakout. Okay. DNA. I don't know this company from Adam, but uptrend, pull back to the 50. Guess what stocks do that pull back to the 50? Often they'll go higher. All right, great question, Ram. This is why I do these things live. Again, I don't ever expect to get 150 people on a webinar. Although I will give Rob Hoffman credit. The first time I went on his webinars, I got the shakes because there were 7,000 people in the room. Um, Talk about scary. So, high jump. Let me see if I got it elucidated in the presentation. I think I do. Let me just figure out where it's at. This I give credit where credit's due, and let's talk about Ian Woodward. So high jump here is Ian, Ian was the storyteller of all storytellers, and he introduced us to the high jump by telling us about his wife's rose garden and how um, when they were starting to get sick, they'd show what he called rust. And that when you saw the rust, you knew the rose was in trouble, but it might get better. And then if it got sicker, they had black spot disease or something like that. And at that point, he knew the rose was going to die. So he wanted to come up with rust and black spot disease for stocks. And so he did a lot of work. And what he found was that stocks will only get so far extended from the 200-day moving average before they're going to, like pulling a rubber band apart, before it's going to snap back. And so he found that to make it even better than just looking at the 200-day moving average, that he would measure the stock closing price minus the 17, the stock price minus the 50-day simple, and the stock price minus the 200. Since the stock is above all those, you're adding three positive numbers together. When a stock is the most extended, and I think we could agree that it was most extended there, the high jump was 100%. What that tells me is that sum of those three numbers was the most highest it's been I don't even know if that makes sense. Sounds good though. In the last 200 trading days. So if I am the most extended that I've been in the last 200 bars, because it could be weekly high jump too, most extended in the last 200 bars, odds are I'm going to pull back. Here was also extended. I don't know what the high jump was here. It was probably not 89.60 because we're looking back 200 bars from here. And since this was a higher high jump, this was not as high as that high jump was. But when I see a above 95 on the high jump, it tells me we're probably due for a pullback. Now, I took this one step further, and we don't have any downtrends here, but mine is will go to minus 100, minus 100. It shouldn't go to minus 200, but it goes to minus 100. And I decided, well, if stock's in a downtrend, then it's below the 1750 and 200, and that distance will be a big negative. And I found out it works the same way. So if the high jump is greater than 95, I'm careful with the long position. I think it's a risky position. If the high jump is less than 90, negative 95, I'm thinking it's time to close my short and it's probably going to reverse. So above 95 or below minus 95, um, you will, it's something to reverse. Great question, Wojtek. We've had that before. The issue is whether I should just put it in here above 95 or below 95, or we should create a column. I don't want to take away all my space. And that is a question that but I do. I used to look for, I'll just talk about another thing that's on here. See this candle, this red dot, and this red dot here? Those are things that George Lee used to use, David Elliott created, and they're single bar reversals. And what it basically is, a red candle high tells me the stock has been in a significant uptrend. Okay, it's this bar here. And I hit my highest high in the last 10 bars today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But I closed negative on the day. So I have a highest high of 10 bars, but a negative close. That could be a reversal candle. All right. Here's another one. It's not red because of the way that I do my candles. An open candle means it closed higher than it opened in my system here. A red candle means it closed, let me say it again. A open candle means it closed higher than it opened, and a white candle tells me it's a positive day. So open white means it closed up here, it opened here, and it was positive on the day. A closed candle tells me the open was above the close. But since it's white, it was still up on the day 0.5%. Here is a red candle that's open. That means it opened at the bottom of the candle, of the body, it closed at the top. So it was minus 0.40, but it closed above the open. Here is a candle that is down on the day because it's red, and it's lower than the open because it's closed. That's the convention I use, and I probably should have told you guys that a long time ago. Not every platform looks at it the same way. See if I can find a green candle low. Yeah, I wish this was color green, not blue, but it's the same basic idea. Although that one, I don't think that one really was good. Let's see what here. All right, here is a green candle low. This one, I don't think it counts as a green candle low because it's got to be, I think it's got to be up on the day, but I'll go and check. Maybe it doesn't have to be up. Here is a candle, been in a long-term downtrend. And on the green candle lows, it's got to be the lowest low in 20 bars. Well, pretty easy to say because there ain't nothing to the left of that bar. What happened? Closed higher on the day, giving me a green candle. Open, closed higher, up on the day. So it's white, not green, but same thing. And so that could be a reversal. That was a reversal. So I will see things that are peaking and they will give me red candle highs or green candle lows when they're cratering. So it's nice to look. So Wojtek, I used to try and scan for a green candle low occurring at minus 95 or below, or a red candle high at plus 95 because I'd be looking for an extended stock. Um, so I'm looking here at DNA. This is the fourth one down the list, and I'm starting to like this new signal. Okay, um, and why do I'm thinking we may not have broken out yet, but we're getting close to breaking out, and a breakout above this line would be very interesting to me. All right, Dynex don't. I don't like the pattern. It might be getting ready to go to the moon. I just don't like seeing the IPO, and it's way off the IPO price. Electronic Arts, so it's pulled back to the 17-day and maybe setting up. Green dot. I don't know if it's a buyout or a flag, um, and that's an important difference to me. So I would go and I would look up here and see if there's any lawyers. Well, I might want to go read it about it. All right. Ooh, explosive earnings. Now that gets me excited. Oh yeah. Great earnings per share growth. All right, here's how my mind works. I'm a simple guy. All right. Kramer used to say he would pay up to 2 times the earnings growth rate for a multiple. So I look at that. So if we look at the last 3 quarters, 60 is the smallest earnings growth rate that we had. All right. It's made 40 cents in that quarter. If I took that quarter and I multiplied it by 4, it's $1.60. On $1.60, the stock is trading at 9 times earnings, 8.5 times earnings, and it's growing here. Now, why does it say negative PE? Because it was negative back here, but it's and the forward PE is projected as negative. But something's going on with the stock. I might actually go try and figure it out. I got great earnings growth. I've got great revenue growth. It kind of looks like one of Ian's box 7 turnaround stocks. So I might want to check stuff out on it. But I'll probably go read that article. But one could certainly, and I love flags. This is a flag. So I could have gone in there and let me hit escape because I screwed that up. All right, delete, wrong button. Go in here, trying to hit the last high before here. No, we're breaking out. That's interesting to me. H Herbalife, big uptrend, pull back to the 50 and breaking out. What's not to like? Breakout or momentum, breakout, volume, and a CPR. ICLR, not as exciting, but it just took out its 200 with a new buy signal and turning up here. We know these are up. I don't even have to look at them because of what we put in the filter. INVA is, I'm not impressed with their drugs, but it's a partner of Glaxo and they make a lot of respiratory drugs. Doesn't matter if I like their drugs or not. Here's a stock that pulled back to the 50, which is the white line, and is moving up. All right, that's all I need to know. I looked at it, I passed on it. And sometimes I pass on things because I know the company and I wish the stocks didn't have names on it because that bias ends up hurting me. But again, I could look at the earnings, I could look at the revenue, I could look at what the forward PE looks like. Does it pay a dividend? Or I could wonder what's going on and I flip on the news. Um, okay. IPDN, um, interesting chart. I don't think it's a split the way it moved. It could be a reverse split, so let's just make sure. Nope. Again, not a pattern I typically buy, but I could read about why. Got to be a meme stock. People don't jump like that. Online networks provide career opportunities. Whatever. Don't know anything about it, but I could read about it. IQVIA. All right. I want you to answer me yes or no. Have I shown you a dog with this scan? Every stock here. Let's see. Anybody want to tell me I showed him a dog so far? You guys still listening? There's no dogs here. This is the purpose of scanning. It's trying to find stocks that meet certain criteria. IQVIA is a competitor of mine. They're probably the standard. Um, it is a healthcare information company. They sell, when a drug company is trying to project their earnings going forward to Wall Street, this is one of the companies that's supplying them data. This thing's ready to break out or break down. I mean, it's got a new signal there. It doesn't have much going on here, so I might be sitting and watching it. But this is a big company. Hello Group, Momo, it's below the 50, which is not my favorite place to be, but a breakout above the 50. It had a Momo and a breakout and a CPR. PHLT, this is a buyout, forget it. Sobo, kind of looks boring to me, but pull back to the 50 and moving higher. This is I don't own this. It's a meme stock, but it might be more to it. This is a stock that ran up here up to crazy dollars, $25, $30, and it ran up here because Nvidia made an investment, and then Nvidia was a short-term investment. They took their investment out, but again, it's not my favorite. You're buying it well off of its prior move, but something's going on. This um, competitive moat and growth potential in the voice AI. AI company just got cheaper. Here's why I buy. $12 AI stock could be the next big thing in artificial intelligence. And again, you could click on any of those on the right and read the story. And then earnings and revenue are worthless. I mean, it's a very early company. But if you've believed in their story, it might not be a bad time. SRE, I thought this kind of a sideways mover. I'd wait for a breakout. AT&T, this is one of my favorite stocks right now. Why? Not because the chart is that amazing, but this is AT&T. Look at this. It's a big uptrend. And guess what else it does? It pays a 5% dividend. And guess what else it does? It does well in bad markets. So when I say it's one of my favorite stocks right now, it's because it's maybe it's the dividend, maybe it's because it's like a utility. Who's going to turn off their cell phones if the market pulls back some? Some people will, but not everybody. It's a stable, able player. Interesting that it made the scan. TD Bank, um, I would have to do research and find out what happened here. Was that a pop and drop on earnings? 29% growth, slower growth here. So then I want to go, all right, what did the street not like? So before I'd even look at that, pop over here at the news. Positive progress, top estimates, record Canadian revenue. Some facts worth knowing. That might be the telltale. Um, I might want to go read that. And do they have some bad dirt on them? And again, even though it says you just click on it, you can read the story. So again, I want to put something together here that has, at least for me, ease of use and can help bring the good stocks up. Trip, pulling back here, up right above the 50, Eurogen, basing here. But even though it's basing, we flipped the OBV and the daily relative strength today. So maybe it's getting ready to move. Then ZEP, big run up, pull back. I think it's an online VBC support company or something. So this is how I use scans. So were all these actionable? No. Were any of them horrible? No. This brought some really high quality stocks to the top. You turn that off and click on this and got to turn off my filters. So I'm trying to remember how I eliminate all those. Let's see. They're still on. So I want to, oh, I go down to the X. I knew there was a way to eliminate them. Okay, so now I've got back. So let me tell about that 3,700 stocks. You probably heard me say it. I'll just say it one more time here. I take, I asked Praveen to build me a list of all the stocks in the NYSE, all the stocks in the NASDAQ, and all the stocks in the Amex. And then every day filter it for $1 and 100,000 shares. And when the market gets strong, we get 3,800, maybe 3,900 stocks. When the market is weak, we get 3,400. Since I'm not looking at all of them, the more I have, the merrier. It feeds my scans. That's where that number comes from. And so this is all the indicators here. Now there's a couple of things you might want to put on. All right. Um, Randy, tell me what the ticker is. And there may be a reason to show you. So when I put in AT&T, which is T, I've got lots of data. All right, SoFi, is it a recent IPO? Has it been here has it been here 10 years? I don't know. Let's put on a monthly. That's why you can't get a 10-year seasonality. You got to have 10 years worth of data. So if you don't have 10 years worth of data, um, it's going to try and show you five. And if you don't have 5 years worth of data, it's going to probably show you nothing. So let's just look at something that's a recent IPO, ALAB. ALAB's only been trading for a year and a half, I think. So it's not going to give me any seasonality. Um, all right, that was good. Um, so other things that I like in here, um, it slows things down a bit, so I don't put it, but I'll show you something that's kind of cool. I thought that Matt Caruso did a great job at the meeting in June. And so he introduced us to his indicator, which he calls the, what is it? The, not impulse. Well, it's when he gets, I can't remember what he gets. It's like the, oh, I think he calls it the FOMO indicator. So let me go in here and let's take out, I don't need three of these. Let's take out that one. Let's take out that one. And let's look at 2050 200. Yes. So I only got one. So let's look at above the, is it the 5 day above 95%? I think he looks at a 5 day moving average. Let's look at the NASDAQ. Stocks above the 5 day moving average, I think is what he's looking at. I think that will do it. Yeah. And what he found was that when the stocks above their 5 day moving average in the NASDAQ get above a certain point, the market will pull back. So let's find something that, let's look at Apple. And he made the argument that sometimes when you see a pullback or the market goes sideways, isn't that the stock is dead, but when you get extended, and this is very short-term extension, when it stocks above the 5-day moving average, percentage of stocks, when it gets very high, above here's 92%, it just tells you that the market's likely going to do a short-term sideways movement to work that off. It doesn't mean that it's not the Hindenburg omen that the stock's going to die. So he basically introduced that at the meeting. I thought it was very interesting. It's a very short and fast thing, but it explains why everything looks good on a stock and it didn't go up. It might be just that the market was short-term overbought. So that was, so you could go through here. It's easy to add things. You double click on what you're adding. Um, what I, one of the next things that we're going to bring over is going to be on the market timing tab, that the market breadth. One of the things I love about, I still use HDSI. I say that all the time. It's almost like it's an excuse. It's not an excuse. In HDSI, just go to a daily chart. You get the spiders. Maybe I should let's look at Apple. That'd be better. The HGSI chart, and this is for obviously for a stock and Apple, so I got my fundamentals here. But on this chart, I have Hindenburg omens. That gives me a sense of what the market is doing. Okay. Do you want to be buying a lot of long positions in the setting of a Hindenburg omen? Me, the answer is no, but I recognize that only 1 out of 4 are a big deal. This was a big deal. This was a big deal. Uh, Hard to say it did anything here. But what I have done is I've now, on my product, I could actually look at Hindis on the NASDAQ, and you might find that there was no Hindi on the NASDAQ here. What else is on here for the market? On the bottom here, um, these are kahunas. Those are on the stock. But the next one up are on the NYSE and then on the NASDAQ, Eurekas and Phoenixes. Those are on the market. Okay. So I am able to combine on a daily chart market indicators, and that might give me an edge. So here is our market indicator band. It has Eurekas and Phoenixes on the NYSE or over here on the NASDAQ. Exuberance to the upside is a Eureka. Exuberance to the downside is a Phoenix. When you see exuberance to the upside at an all-time high, I get nervous here. It's about to prove me that it was a short-term thing and I should not be that excited. Um, but that is sometimes can be signal you're getting to a top. Um, this is Praveen's invented wonderful defib indicator that calls the bottoms. The upside down triangles, the red, are the Hindenburg omens. These X's are the bangos, another sign of exuberance. And the pluses here are the bingos. Now, if you hover over these, Scott, they'll tell you what they are, or anybody. Okay. And you just got to get comfortable with what they mean. And just from the top, Hindenburg omen. It's a old wives' tale that I think works. It's a signal that the market is potentially setting up for a big fall. Every bad market since before the Great Depression in the 20s and 30s was preceded by this signal. Why doesn't everybody talk about it? Because one, it has to be confirmed. So if you look at unconfirmed signals, they don't work. A confirmed signal means you have to have two within 30, 31 trading days. The other reason is 3 out of 4 times they're just small pullbacks. I've learned to heed the Hindi. All right. The Bangos, um, just signs that you're getting outsized moves in the market, and it's a market generated, not a stock generated. Be aware. That's all it tells me. It doesn't. I'm not going to make trading decisions on it. The Eureka is combining arms and other stuff, and we try to develop an equivalent of the IBD follow through day, which note to Praveen, we can code that. We should be coding follow through days, so we can talk about that. A follow through day says that after the market has made a positive move in a downtrend, a positive move in a downtrend, if within X days, starting on day 3, I believe, you have a 1% move in an index on a higher volume than the day before, that's a follow through day. And that's a reversal to the upside. And of course, Praveen will figure out how to have a follow through day to the downside. So I think we can code that. Bozzy wants distribution days and accumulation days. We can probably do that as well. It's only math, and we've got all the ingredients for that. So that's what the Bango is. So the Eureka is that upside day. When a Eureka occurred down here on the bottom, I put out an obnoxious video on April 7th, 9th, 10th, 11th, saying the bottom is in. And I may have been a day early, but it didn't close below my day ever. It traded below it and closed up the next day. It was because I saw the Eureka. It was because we had a defib. And it's also because this last Phoenix occurred after a huge sell-off. So a Phoenix occurring after a big sell-off might be the sign that the sell-off is done. And then the bingos are the baby out with the bathwater. That's what they would say on CNBC. Oh man, the markets were down 3.5% today. They were selling everything and then asking the question, was today the day that the market bottomed? And those are the baby out with the bathwater means they were selling the good things out at the same time they were selling the bad things. Or they, and so if people are selling even good stocks, it's probably capitulation. So bingos can be on stocks, they could be on anything. It's a potential sign of capitulation. So however I should define the bingo, which are the red X's, again, it's a market call. It's the opposite of capitulation. And then that green triangle is um, the defib. You don't see many defibs. In fact, when he first showed it to me, I'm looking, because I like to visually validate before I go out there and say, hey, we got a new indicator. And we're going and we're going. You got to have a big sell off. And here you go. You had 3 of them in a row. This was the bottom in 22. And little early, but it called it. And it, you had a fake out here and the market ran up and then it pulled right back. And then you had another signal and it was the defib followed by the phoenixes that I think gave it away. And I can keep going. You can see a bunch of Hindis up here. Those certainly has worked. We're going back and we had Hindenburg top here, Hindenburg top here early. And often talk about I respect the 50, that I don't necessarily sell things when the NYSE, which gave the Hindi, is still above the 50. You don't get a lot of defibs unless it's a big sell-off, and maybe someday we'll play with the settings and make it happen more often. But they're there. Big drop in 2020, and what did you get at the bottom? You got Mr. Defib and a Phoenix at the same day. I'm a believer. I am a believer. So where I started here was, and I've asked for it, and knowing Praveen, we'll get to it. We both have day jobs. and we don't sell enough to pay for either of us to quit. And I don't anticipate that will ever happen. So we'll continue to have day jobs. But my wife would, well, on one hand, she'd be very happy if I stopped working. On the other hand, she'd probably kill me if I was home all day. I want to take this band. I want it as an indicator, and I want to be able to add it to the bottom of my JAS layout. Why? So I can get a sense of what the overall market is doing. Why haven't we done it yet is Praveen's got to develop some type of caching methodology so it doesn't calculate it every time I change stocks because it will take too long to change stocks if it's got to recalculate that on the bottom. And as you're probably experienced, except for the wake up factor where it takes a second to wake up the server, after the first ticker, it should be quick enough to actually do what I call flickies online instead of having to use a product where the data is stored on your hard drive. That is this layout. Any questions on this layout? All right. Let me talk about market timing and how I look at market timing. There are no hard, fast rules that on, off. Wax on, wax off may have been great for the Karate Kid, but I don't know any rule that I trust with my money that says market on, market off, market on, market off. So everything is a gray area. So I look at the market in that I want to know when to be in, all in. I want to know when to be all out or be short. But most of the time, it's going to be a gradient of how much in or out I'm going to be. So only, this is my creation, the timing briefing, and then I'll show you what Praveen did to make it better. And everything was loaded, but because I had the missing workspace, and we're just going to take time to load it up. Come on and load. So the great book is Stanley. What's Stan's last name? Oh, I can't believe I'm not. What's Stan's last name? Somebody, the guy, I talk about him all the time. Now I can't remember his last name. What kind of a person am I? Stan Weinstein. That Drunken Miller is another smart one. Has a great book, and in the book he talks about his timing methodology, the WMAs, and stage one, two, three, and four. So I stole the idea. I said, can I combine the 30 period WMA in yellow and my trending indicator that I was involved in creating called the bongo? And can I define an uptrend as being when the price of the bar closes above the WMA and the first day that the bongo is a buy, a blue, and that combination of things, which occurred here, all right, that combination of things got me into the market. Now, did it occur here? Yeah, I guess it was on this bar. It actually occurred on the same week because you could see up here the bongo turned blue. So my gross higher end determination of market direction is I have the spider, the Qs, the diamonds, and the Russell. And the dominant market trend at any given time is determined by the weekly charts. And I'm looking for price closing above in a blue bongo. And we don't lose that buy signal until price closes below and we have a red bongo. And we didn't lose it here because price closed above. So we keep going and we keep going. And there's your first close. Red is there, and we went to red. The goal to me of a timing model is to keep me in the majority of the uptrend. Kept you in from late 23 until the beginning of 25. It was a good time to be in. And I use the spider. I look at the others. The Qs have been a little bit more volatile. Remember, these are weekly candles. But if you look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row, told you to be up. The Qs constantly here on the spiders. The Russells have been mostly up, interestingly, even though they're the weakest, and so are the diamonds. So this will be my dominant approach to market timing is what are these four ETFs? If these models are all green, and I don't even have to look here, I don't have to look at the bongos, I'm just looking at the color. If those are green, then the dominant trend in the market is long, period. No ifs, no ands, or buts. It's long. Now, we're not stupid, and you're not stupid. If the market week closes here and you look above and you're still red, but you're just below the WMA, you could be thinking we're about to switch. That may play well into the other things I talk about that are signs of a reversal. But when does the weekly bar close? When the week is over. So you may revert during the week and you might want to front run, but it doesn't mean it's going to close there. So you can look, but you don't touch. If it's green, it's long. That's the dominant trend. But I have to look at the daily trend because the daily trend really controls short-term movements. And in a perfect market, the daily will be green and the weekly is green. That is I'm in pretty deep market. Okay. That is my favorite market when everything is green. When I start to have combinations where I start getting red in some, all right, and pullbacks here, they all went red during this little pullback in here. All of the markets, you can see the cursors moving on both sides. When this goes red, but the weekly is green, I have a pullback in an uptrend. Now, a new bear market is probably going to start as a pullback in an uptrend, and maybe it's taking out support, maybe it's the weekly turning. That's going to tell me that it's not just a pullback in an uptrend anymore. But I will respect this combination of the daily and the weekly. Now, if you really want to be safe or slow, you can look at monthly on the model as well. Now, the monthly is going to stay, it takes a while because it's got to go back for years of data to create this chart. The monthly is not good for trading, in my opinion, because it's good for buying and holding. Because you could see on the monthly charts since the end of 23 on the spiders, the middle of 23 on the Qs, the middle of 23 on the diamonds, it's told you to stay in the market. This is the long-term trend. The weekly is the intermediate long trend, and the daily is the short-term trend. So if they're all green in all four boxes, I am definitely long that market. Now, I'm also not a kamikaze pilot. So I combine that assessment. All right. Am I in a pullback and an uptrend? Am I in an uptrend? Am I in a downtrend? Or are the weeklies red and the dailies have gone green? Am I in a retracement and a downtrend? Those are the four things I could be. I'll go into the market breadth tool and things that are going to influence my decisions. And this is the basic market breadth. I asked Praveen to give you the bigger one. I don't know if that happened or not. It's in mine, but it was in mine before. I look at stocks above their moving averages. I'm looking in green at stocks above the 20, in white stocks above the 50, and in red stocks above the 200. I might play with the market and look at prior highs. Where did the green get to? 70, 67, 63. All right, let's find another high in the market. See, at the time, that was a high. And that one here is looking at 72, 71, 68. And at the low, what were they doing? In their 20s. Okay, that gives me some context. I'm going to go back here and I'm going to see 70, 68, 61. We're getting kind of ripe up here, aren't we? It doesn't. Okay, Bazzi, we're going to get to that one. I'm going to save that for a few minutes. This is telling me that we're getting extended. So now I have to add, I had that Eureka at a high. I got some Hindenburg omens circling around, and I'm getting extended in stocks versus their moving averages. I'm just adding up the pieces here. What I gave you here, and hopefully Praveen has activated it for everybody. Let's let it boot. And when I start off in the beginning, I open up every window and let them populate. And that way, when I typically do a video or use it, it's already done. Um, and some of these, and you see when at first, you won't see it, are looking back a long time in data. It'd be nice if there was a toggle switch that we could toggle, I want 5 years or I want all data. Because if we could do it and click 5 years versus all, then that might make our lives easier. So the way the program formats it, it puts the highest high on your chart up at the top. It puts the lowest low on your chart on the bottom. So the first thing you should notice on those price candles, and I better tell you this because it's different. The spiders, the NASDAQ composite, not the Qs. The Russell 2000 and the S&P 1500. So the first thing you should see when you look at this, and this is on a daily chart, is all of these big indexes are near their all-time highs. Ka-ching, ka-ching, ka-ching. The Russell is the one that's far away from its all-time high, but it's at it's had a big move to get to where it's at. That's exciting. The second one, for those that have followed me for a long time, for years, I was been going to TC 2000 and I've been calling up and looking for the 13-week new high, new lows. And like clockwork, and I mean like clockwork, there is a way to maximize the sell, isn't there? Let's see. Share save. I'm just trying. I don't use this program at all, but I know there's a way to maximize it. Let me just give me a second and see if I can find. I don't want to kill what I'm my layout, so because then I have to go back and remember how I made it. Nope. Darn it. All right. The point is, when you look back at significant highs, you're going to find the 13-week new high, new low peaks. And when that 13-week new high, low peaks, this is what the S&P does. It peaks the S&P. It peaks the S&P. This is not a peak that's high enough. It didn't get up here. All right, so it doesn't count. It peaked. The S&P rolled over. Um, little pullbacks. Little pullbacks. All right. This one, not much happened, just a sideways move. Little pullback. Let's see if we can go back to March of 20. I just don't use this program hardly at all. Share. It's got to be a way to maximize it. I wish I remembered how. But this is a great indicator. And oh, by the way, God, if I go back to 20. in March of 2020, oh, that's going back a long time. I don't need to go back that far. It lived down here. So you had to be careful. You don't just buy it because it dropped, but you had to be ready for this market to recover. I love this signal. So they don't tell you what markets they're on. Praveen, you're here. I don't know if we have access to the Wilshire 5000, but if we do, I'd like to try it on that market. This green number here, 0.96, too high. It means this thing is it looks like above that line, it's going to probably pull back. 0.74, this thing was 0.96, it's pulled back. 0.95 on the S&P 1500, 0.93 on the Russell. I've got objective evidence that says this market is extended. And be careful, you might get a pullback. Period. That's all it tells me. Now, when it does this, buy, 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 buy. When it gets all the way up to the top, which it will from time to time, it tells me to be careful, be careful, be careful. And so I have found this to be uh, a great tool for, see how much data we got here? I mean, this is going all the way back. Well, that just to '02. Obviously, we don't want that much data in the picture. Um, but that's partly why it takes a while. All right, let me just get this back. All right, oh, I've got 61 520 bars. Never mind, that was me being dumb. You type in here, it tells you how many bars to put. Here is a reproduction of the three things above the moving average. Here's the AD line. Can somebody tell me why the AD line on the NASDAQ is in the toilet and we set all-time highs up here? Is that what we call a divergence? Hell yes, it is. And then I got the RSI here, again, looking for divergences. How will I know after a sell-off when it says I start getting the greens on the dailies, the reds on the weeklies, and I wonder if it's time to go back in? Is this just a small retracement or is it all in? I'm going to be looking at some cool things. Let me hold on a second. Let me see if this will work. Where is that line? Oh, did I cover it up? I set it up so I could have a drawing tool. No, I can't find what. Oh, okay, here it is. Yeah, I'm going to be looking for something like this to be going up. And the oh, okay, and then I got to touch it every time. That's not going to last. While the markets are starting to go down, I'm going to be looking for this to have pulled back to here and starting to do this. And that's going to tell me that retracement in a downtrend is probably a reversal occurring. I'm going to see eurekas coming as well. So I might even see, God forbid, because that means we lost a lot of money to the long side, Praveen's favorite little thing, the defib indicator. So I put all this stuff together. I put all this stuff together to help me figure out what's going. I actually, all right. So that's how I look at market breadth. That's how I look at market timing. I put it all together. It's art, it's not science, but when you are all green on the weekly and you are all green on the daily, let the thing run. Sure, I'm looking at that new high, new low every night to make sure it's not getting dangerous. I'm looking at the stocks above the 20, 50, and 200. I'm playing with that FOMO indicator. I'm doing all the things that I can do to look for an edge that maybe the market's going to slow down and go down. But nope, I'm relying on my timing model, and I've relied on it for a long time. That takes care of that. I wanted to show you. Um, One of the new features, again, I'm not a fundy guy, but let's say I want to look up AGX, the one that shot me this week. And I could look at all kinds of fundamentals. I don't do this. It's To me, it's boring. Everything's already in the stock price. And you know what? So are earnings. It's surprises, and you don't know that stuff until um, you don't know if you have a surprise until after the earnings come out. But if you want to look at annuals on the financials, if you want to look at, so you have annual, quarterlies, and trailing 12 months um, or 12 quarters, you can look back to your heart's content. Be my guest. Praveen put that in there because apparently among you are some that like fundamentals. A question about pre-market and after-market data. I don't know if it's available through our data vendor. Praveen will have to check that out. TC2000 has it. I don't use it. I don't trade the after-hour markets um, except in a rare scenario. And the reason is if you can't do options after hours. I don't know if I know Robinhood trades everything after hours, but I don't know if they do options after hours. You can't do options after hours typically, and the volume traded after hours is teeny weeny weeny, so that the bid and ask spread are just ridiculous. Um, okay, so Praveen says we have it. We'll have to think hard about how we use it. Will it mess up our charting model? Um, can we, if you click it on, does it default? I mean, all right, we have access, options open until 4:15 p.m. Yeah, yep. But after that, and even between 4 and 15, I'm thinking you wake up at 7 a.m., Tom, you saw a stock last night. God, I want that stock. Um, Everybody else wants the same stock you want. Stock is going to gap up. I mean, you have to put in limit orders, um, and it's I hate the pre and post. Um, Enjoy the barbecue. Yeah, I always wait till after the open, but we can get the after hours in. Maybe we'll have some type of a grid where you can open up your watch list and see what's going on after hours. Um, I'll talk to Praveen about what makes sense. What else did I want to show you today? Um, oh yeah, I love this. Let me go to weekly and give it a couple seconds to load. It takes a little. This is so cool. Maybe I'm just weird. Um, but it is going back to 2019, 6 years of data. And I bet we can get more data into this. Maybe I just have to do something. It's a weekly ratio chart. So it takes the weekly closes, compares the spider, the sector on top of the spider. When it's going up, the sector is, yep, when the sector is going up, we'll get to that, the new scanners in a second. When the sector is going up, it tells me it's outperforming the spider. When this is going down, it's underperforming. Going back to 2019, the big winner, no shocker at all, is um, technology. Communications is second. Bitcoin obviously has had a great run. Real estate's been dead. Healthcare has been dead. Staples has been dead. Energy has been mostly dead, and materials have been dead. Doesn't mean they haven't gone up. The market's gone up a zillion percent in that time. It means you made money by being long XLK and XLC. And everything else, if you were just long those, they did worse than just being long the spider. That's kind of meaningful to me. Now, I don't trade long-term charts. What about the dailies? It's going to tell you a little bit more time. So this is going back almost 2 years of data. And you can see some changes in the dailies. But what I do to figure out what's going on in the market, the reason we had the hourly was because to me that's the one that makes the most sense. And when I look at this, and I look at what's working right now on the hourly charts compared to, I got to make sure I didn't pull them over too far. Compared to the spider, what's outperforming right now? And it's not what you want to see, by the way. Um, Energy's outperforming, interestingly, because energy's been poop for a long time. Staple is turned up, discretionary is turned down, healthcare is turned up, technology has come off of where it was on the short term. Back here, the peaking, it's only July 30th. It's only a month and a half, not even a month and a half, it's a month ago. Communications came off, so you can look at each one. I'll get a sense of what's working right now in the market before I go look at stock charts. And I've promised my wife we're going to be done at 1, so we got 13 minutes. Let me show you the scanner changes. Praveen, I saw the power of creating my own scans. You got to build a save function. I want to save. What I did is I went in and I did greater than or equal to 1 on OBV, greater than or equal to 1 over here, greater than or equal to 1 over there, and I got this, and I got, what did I do differently? Yep, greater than 1, greater than 1, greater than 1, and it took my list of 4,000 down to 1328. And then I ran the new dynamic systems long, and I got a small list. Then I went in here and I said, we got to do price and volume, price and volume. Hit OK. Teeny weeny list. And what was really cool about this is they all are kind of attractive. So I want to I want to save that scan. How do I save that scan? You already got it, Ram. Ha! He asked when to get the dynamic systems. So Praveen, we got to get the savings because you're getting. Praveen built this up here ages ago, and I probably gets frustrated by me because I don't use it all the time. I like things that are pre-made, but there's power there. I got to have a way to save that, and then maybe we have a second drop down of saved one. So, all right, let's talk about. So let's kill them all. Kill these. Is that a save? Let's just tell me what's in it. Okay. All right, back to my 4,000 stocks. Um, this is, and I can't show you my Thinkorswim because I have the name of the program I reproduced it from. And there's a program out there that's pretty good at picking up trend changes. Here I have a daily chart and a weekly chart. And if you want to put the dynamic, you can put it on for yourself. I mean, going short up here was a good trade. You're kind of choppy in here. Going short again was a good trade. Um, it's just another tool to make your eyes look at a chart and say, should I be buying this? And all I did was I took that prior setting up the crosses here and the price and volume, and then added the signals to find stocks making a signal that we're doing that. So in to answer your question, the dynamic system long and short is a new trading model that I ported over from my Thinkorswim system that you can filter for just by going down here, dynamic long or dynamic short. Now, there were 137 signals overall in the whole market on Friday of this. Again, play with it. Decide if you like it. To me, I think combining it might give me an edge. Okay. And the signal is within the last 2 bars. Okay. But really, what we added that gets me so excited is free parking and more. I love stocks that pull back to the 500, the 50 and bounce. So now I could go $5 and 500,000 because that's what I do. I want them to be in an uptrend. So let's just have the daily bongo as green. If the daily bongo's in an uptrend, they're in an uptrend, or not the daily, the weekly. Somewhere down here. I know it's on here somewhere. Here it is. Weekly bongo's up. And now let's find stocks that have finding support at the 50. Remember, the 50 is white. This one would have fired on this day. I had 160 stocks. Look for the ones with momentum. So Cisco, not that Cisco. So there is a percentage that we built in here. It would be really nice someday to be able to change that setting, but this is 78.80. Stock traded down to 79.76. 2% of that is $1.60, and I think we looked at plus or minus 2%. Maybe 2% is too much, and maybe we can put adjustments in there to give you flexibility. But each of these stocks should be pulling down towards the 50. It has to be within 2%, right on the 50. And why? Because in my 30 years plus of trading and thinking that Ian is a genius and noticing that stocks like to pull back into the 50 and bounce if they're in an uptrend. Here's a stock in an uptrend that has pulled back to the 50 and bounced. Maybe I want to ride that stock. Not saying I do. Volume, breakout, momentum out of a squeeze, good relative strength and OBV. KHC below the 200, but it's pulled back to the 50 and it moved up. This scan is looking for the stocks to pull back and move up. I'm not sure how many days back it's looking. Are the diamonds yours or John Person? The diamonds are mine. There's no PPSs on this chart. I don't have John Persons activated in this version. Trip, pull back to the 50, got a dynamic system sell or buy, couple of blue dots. So all we're looking for is did the stock pull back within 2% of the 50? That's what that scan is. All right. Now let's change the scan a little bit. Let's do the same thing. I want bongo up and I want price and volume. I'm going to add above the 200 and now I want to find stocks that are crossing up and closing above the 50. Not that many. Here's that crazy stock across the 50. Robert Half Herbalife. Here's the prior close below the 50, and here's the current close above the 50. Autodesk crossed the 50. AHCO crossed the 50. Toronto Dominion Bank crossed the 50. I think that's useful. Yep, Tony, I'm going to show you that right now. Let's say I was curious about seasonality here. Let's go do it here because it's not on this one. Highlight the bar you want to affect and make sure you got a stock here with 5 years of data. Agilent's been around a long time. Okay. All right. My wife's going to start yelling at me. I apologize in advance. If I tell her I'm going to be done at 1 and I'm not, she takes it as a personal affront. 40 years of marriage, you learn to deal with it. I got to find seasonality. Here's seasonality. That's 1. Double click it again. That should be 2. Okay. Now I'm going to open up the diamond. I put 3 on, so that's even better. All your settings are up here. So I'm going to go, first one I want to do 5 years, and I want to start today. Then I'm going to do 10 years, and I'm going to start today. And then I'm going to do 5 years, but I'm going to start year to date, and I'll show you why. Going to hit OK. So I got here the color coordinated up here, the 5 and 10 years, starting today, tell me what it's going to do. And then I might want to ask the question, how has this performed this year? Has it actually matched what you'd expect? And how has it tracked? It's kind of tracked the pattern pretty well. So hopefully you saw it's clicking on indicators, highlighting the chart, clicking on indicators, and then each one you want to add, you double click, double click, double click. Like for example, if I wanted to add a chandelier now, double click. See how many of them I put on? I only put one. Good. And I come down here, now I've got the adjustment on the chandelier, and maybe three is the right thing. And the way I look with the chandelier, it could be a stop, but also across above or below the chandelier, sometimes I look at it as a signal. Not going to go into chandelier much today. So let me go back to the front, and in the last couple of minutes, I'm going to finish up. Um, we're going to make it as far as the diamonds go that you can have whatever shape you want, arrows, diamonds, box, circles, lines, smiley faces, maybe even bears and bulls. And then other scans just to show you that we added. You can look at support at the 17, the 50, or 200. You could look at resistance. So resistance at the 50 should mean I've not broken through the 50 yet. So let's do that. Let's do price and volume, hit OK. Let's just look at, see what I'm talking about. Close was at 318.65. Ooh, we're actually right at the 50, 318.48. So we've pulled into the 50. Now, is that going to fail and be a shorting candidate? Or am I going to break out? We'll have to see. N. Uh, Praveen, if it's 50 resistance, we're supposed to, that should be crossing through, but not, let me make sure I don't have something else highlighted. Oh, it should be 50 resistance. Let me make sure I got that. What did I do wrong? Yeah, I've got the 50 resistance. 50 resistance should be just like the 50 support that it doesn't get through. We should have three patterns. And 50 support, my stock comes down and does that. And whether that's 1%, 2%, whatever, that's support. Resistance, and again, we have to set the filter as to what percent we want to capture. And then breakthrough is that, and breakdown is that. Now, you could have support and resistance, or support and a breakout at the same time if my price closed right above the 50 and I broke out above it. So I think we've got to make an adjustment there. Folks, sometimes I haven't checked something yet enough to say. So, but basically the point is we're coming from below. This was what I was looking for exactly. We came below, we didn't break above the 50. We came below and we closed down here. It's a close. We did not break above the 50. That's what I want to be scanning for. So UNP, we closed below the 50. This is exactly what I want to be scanning for. We've retraced to the 50. So it's within 2%. Maybe we'll find a way to ultimately make it user changeable. This is exactly what I want to find. So, guys, I'm tired. You guys got to be tired of listening to me. The recording will go up. May not put it on YouTube. I don't like discussing my results on YouTube if somebody finds it. Um, what I just did is I now limited it to stocks in the relative strength IBD wise of 80. So hopefully you guys learn from this. I love doing these things. I'll keep doing them. If you don't have the program, Special deal. Haven't done this before, really. I've always made it easy to buy because I give people credit for some of what their prior purchases, but I've never priced it. In fact, I had to call Praveen for permission. 12.95, and I can send you a link if you're interested, and just send it to me at marketmripro@gmail.com if you're interested. Maybe no, if I stick the link there, I'll forget to take it and it'll be there forever. Have a great rest of your holiday weekend. I'm going to get some lunch. You should too, or get breakfast on the West Coast. Talk to you all soon. Come to my live meeting. I don't want to be lonely. I won't be lonely, but we could use a few more people. Thanks, and goodbye, everybody. Stop all the recordings. Stop share. Stop the recording. Let's stop.